You're watching Metals in Motion. I'm Thalia Hayden with ETF Guide. We're glad to see you again. Does gold's recent weakness during a global crisis signal a breakdown in its safe haven status, or is this a temporary divergence? Here to answer that and more is Steve Schoffstall, Director of ETF Product Management at Sprott Asset Management. Welcome, Steve. Thanks for joining us.
It's great to see you again. Thank you.
The escalating conflict with Iran has triggered renewed volatility across global markets. How should investors be thinking about allocations to critical materials in this environment?
Yeah, this is a question we're getting a lot, actually. And I think one thing we tell investors is if you look at why you're originally invested in the critical materials space, does that thesis still hold true? And a lot of times when we're having these conversations, we tell investors it's best to look for the longer term. We're going to see periods of volatility, particularly in miners, where a lot of these materials are still in an emerging type sector. So we expect the volatility. A lot of it comes down to just staying resolute to whatever your investment conviction was and look at these pullback opportunities as opportunities to potentially reinvest at lower prices.
Got it. Now with oil prices rising sharply since the onset of the Iran war, what effects are you seeing on demand for critical materials like copper, uranium, and others?
Well, I think a lot of the impacts that we're seeing on critical materials are more around what might happen and what the market is thinking are some of the possible outcomes. When you start to look at the fundamentals for a lot of these critical materials, we haven't really seen anything change from that standpoint. And I'd argue that in many cases, we've actually seen over the last, 4 to 6 weeks that those cases have gotten considerably stronger. Uranium's a great example of this. I think if one thing's come out of this conflict and what we're seeing with the oil market disruptions is that energy security is no longer an option for most countries, European, US, otherwise. And we saw actually the president of the European Commission just back on March 10th came out and she said that moving away from nuclear energy for Europe was a strategic error. Right. So when you start to see this type of rhetoric coming, we expect to see policy come behind that. You look at some of the other markets, things like copper, which are more and more becoming involved in non-core uses. So not real estate or those types of things, but about 68% of uses now would be considered core uses. That's expected to drop to about 55% here as we move through the next 2 decades. A lot of that extra growth is expected to come from defense spending, which is now over $2.6 trillion. It just took 5 years or so once we broke that $2 trillion mark to get to 2.6 trillion. Things like rare earths, very much used in missile technology, drones, which we're hearing a lot about, fighter jets, a lot of defense systems, and even lithium. We're hearing of some battery makers that were originally setting up operations for EVs are now looking to the defense industry as lithium is very important in drone technology, missile guidance systems, things like that. So what we expect to see is that energy security is still going to be front and center in this, but we also see this other aspect of defense spending that is likely to provide some additional tailwinds for a lot of the critical materials moving forward.
When we look at miners, how do you expect the recent decrease in the price of metals to impact miners?
Yeah, I think we're seeing some of that shake out here in the short-term volatility, right? So anytime that you see higher oil prices and energy costs, that's going to have a negative impact on miners because it's more expensive to run their machines. But I think if you take a step back and look at the bigger picture, what we're seeing is still incredibly bullish for miners of critical materials. Things like price floors in critical materials give stability in price and allow miners to make informed decisions when it comes to investing. We're seeing direct government investment, not only in different projects, but also in miners themselves. And just the incentives that we're seeing coming through the government action to build out domestic supply chains. All these are very supportive for the miners of critical materials in particular. And, we're coming through a period now where you've had, 2 or 3 years for a lot of these metals of higher prices for a sustained period of time. A lot of these miners are much more profitable than they were 2 or 3 years ago. So we still think that there's a great opportunity for some return potential in a lot of these miners.
Shifting to gold now, Steve, the recent market sell-off has caught many investors off guard. Does this challenge gold's role as a traditional safe haven, or is this more of a short-term dislocation?
I think what we're seeing is a short-term dislocation. And typically what you see in periods of extreme market stress, and we're seeing that come through the energy markets at the moment, is that you tend to have assets start to become more highly correlated. So they're moving directionally more the same. You tend to see some pronounced moves in one direction or the other. This isn't something that's new for gold. Back with the global financial crisis in 2008, COVID in 2020, we saw a similar pattern emerge where we did see gold sell off. Usually it's not because of losing its safe haven status. There tends to be a need for liquidity. And gold is one of those assets that investors can often access liquidity. So we're seeing that selling happen. That's putting some selling pressure. But I think another aspect that's really changing the gold market is the demand from central buying that we've seen take center stage now for the last 4 or 5 years. That's slowed here as countries are navigating these higher energy prices. And we expect that once we get through this period of volatility in the market, that we may see those central banks come back to the table and continue their buying as they look to diversify away from US dollar denominated assets.
Now, Steve, one last thing before you take off here. Silver has declined sharply after hitting all-time highs earlier this year. Are the drivers behind silver's weakness fundamentally different from gold? And what does that divergence signal about industrial demand versus monetary demand?
Yeah, they are a bit different, right? So I think that probably the biggest difference would be that you don't typically see large amounts of sovereign buying that you see in the gold market. I think what you're seeing now is a lot of the volatility that's coming into the market is coming through derivatives, so things like futures and options. But when you take a step back and look at the fundamentals, and you mentioned the increased industrial demand, that is one of the aspects that's really driving silver markets. And in our view, the fundamentals remain strong. If you were to look at the last 6 years of silver, we've actually been in a deficit each of those years. And going back even further to about the middle part of the last decade or so, we've actually seen supplies decrease by about 4%. So we're in a market here where we're seeing decreasing supply, increasing demand. This short-term volatility that we're seeing, we don't expect that to have a long-lasting impact on the long-term outlook for silver.
Steve, thank you so much for joining us. We appreciate your timely insights. Keep up the great work.
Thanks. It was great to be here.
And for U.S. investors, Sprott does offer several ways to participate with ETFs linked to high demand critical materials and minerals like uranium, rare earths, copper, and more. So visit SprottETFs.com for the very latest. And if you missed any previous episodes of Metals in Motion, we've got you covered. Just go to the description section and you'll see everything we've aired this year. All episodes on our season 3 playlist are neatly organized, archived, and ready to watch. And that does it for today's episode of Metals in Motion. If you enjoyed the show, please tell us in that comment section below and be sure to hit that like button. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.